Hi, and welcome back to my channel. Today we've got a lot to talk about, but of course the big thing is how I lost $500 in the market. This is certainly not unheard of, and we know that everyone has struggled in the past couple weeks, but I think it's important to go through this and explain both how I lost that money and why I'm hoping that it's finally going to stop and we're going to see a resurgence. So as we can see right here, $35.89 down $32 on the day. If we zoom out to the week, things start looking a little bit more dismal, down 2.3%. And out to the month, this is where it really starts getting scary. As we can see, peaked here on the 20th at $39.44, and the bottom here was $34.08. So over $500 in losses in 8 days. It is not good to see. It's pretty scary. But like I said, everyone's struggling, and we'll talk about why that is. But of course, since my last video, we can see that I have inputted another $50 into Robinhood, which means my total investment is now $3,500. And as we can see, they did have this huge drop off. So what I do with that $50, I did go ahead and buy a share of AT&T. I did get an extremely discounted price on that because of the market struggles last week. And I did go ahead and buy about $15 worth of Bitcoin. So those are two of the staples of my portfolio, and definitely two positions I'm looking to increase. We'll talk about it later in the video, but I do have 0.07 Bitcoin now, up to 7% of a Bitcoin. But I have to say right now, I was right. You should have listened to me, and I should have listened to me. What am I talking about? Alpha Pro Trust, trading right now for $17.51. Now, let's roll the tape. The second stock I have here for you is called Alpha Pro Tech. We'll talk about why this is important, but first, make sure if you enjoyed this video or any other that I've made, like the video itself, let me know what you want to see next, and of course, subscribe. The channel is growing slowly but surely. Thanks. That's right. I recommended this stock when it was trading for about $6. I really should have listened to myself, but here's where it starts getting really interesting. If we zoom out to the last week, we can see that they actually peaked here on the 28th for about $40. I wish I would have bought this. Everything else was down 10 to 20%, and this stock spiked. It was actually worth 7 times what I had looked at it for. It's definitely disconcerting. It's something that I'm very frustrated about, and I'm definitely looking at buying this now. The problem is that the price might be a little bit inflated. The interesting thing here is on the month, we can see up 221%, 3 months up 433, 351 on the year, and if we zoom out to 5 years, we can see that they've been struggling immensely here down at the bottom, trading for $1.57 and now trading for over 17. Again, it's tough to figure out what to do with these stocks ahead of time, but definitely one that I'm interested in. A big reason for this, as I mentioned in my previous video about this stock, is that they do make disposable health patches, pieces, face masks for these health crises. And what that really means is that in a virus outbreak like coronavirus, we see their stock spiking when others are struggling. Of course, when that video came out, I didn't understand certainly the severity of coronavirus and what exactly would happen. So it's very difficult to know that ahead of time. It is what it is, but like I said, you should always think about these stocks, make sure you're doing as much research as possible ahead of time, and I wish I would have listened to myself. But again, still up $89 all time, certainly not very good compared to just a couple weeks ago, but I am optimistic. And I have an article here pulled up about why this is important. So this is on the Washington Post. They said the Dow plunged despite the Fed's emergency rate cut to stem coronavirus panic. Basically, if you did not know, the Fed did go ahead and cut their rates again today to try to get people back in the market. The problem is that when you have a large sell-off like we saw last week, prices tend to drop, and it really exacerbates the issue and makes things worse than they initially were. So here they say U.S. stocks plummeted Tuesday after the emergency rate cut failed to bring calm, extending the mayhem that has defined the markets for days over growing concerns the coronavirus will blunt economic growth. So here we can see the Dow Jones sank 3%, 786 points. The yield on the 10-year Treasury bond, they describe it as a foundation of global finance, briefly fell below 1% before recovering slightly as investors fled equities for the safety of bonds. One of my favorite quotes is Warren Buffett. He says, "Be greedy when others are cautious and be cautious when others are greedy." The way I see that is that right now is a terrific time to buy. As I covered last week, both Warren Buffett and some other really well-known investors have said that the interesting thing to note here is that the long-term outlook of the stock market has not changed at all. Certainly coronavirus has spread more since then, and there's more to be concerned about, but it's not a long-term concern. This is a short-term issue. So here they say the S&P 500 and NASDAQ both closed off about 3%. All 11 S&P stock market sectors were in negative territory, with technology and financials faring the worst. It happens. It's not the end of the world, like I said. Lower interest rates have an adverse effect on the profit of banks and financial services companies. All but one of the 30 Dow components finished the day in the red. American Express, 3M, and Microsoft were the biggest losers. Only Coca-Cola stayed positive. Well, I own Coca-Cola, so that's good to see. But I also own Microsoft, one of the biggest losers. So definitely concerning for me. This is stocks twisted and turned most of the day, despite the central bank announcing to slash the benchmark, the interest rate by 0.5 percentage point. Basically here they talk about the Fed rate and people saying that either that decision was good or that decision was bad. But the interesting thing of note here is they say the Fed leaders were unanimous in their decision to bring the rate just below 1.25% and had not taken such an emergency step since 2008. The reason this is concerning is because people get freaked out and think, oh my goodness, 2008 all over again, the market's going to crash. But as I mentioned, the long-term outlook of the market hasn't changed at all, and I don't think there's a whole lot to be concerned about. Basically, the rest of this article talks about the issues, and here they say, we do recognize the rate cut will not reduce the rate of infection. It won't fix the broken supply chain. We get that, but we do believe our action will provide a meaningful boost to the economy. The reason that they talk about this supply chain is, of course, that many of these high-tech parts and different things are manufactured in China and certainly in the Wuhan area. And the problem with that is that people have to stay inside. They can't work. Nothing's going on. And I've seen articles even saying that Apple's struggling to keep up the demand for their computers, phones, iPads, all sorts of different things. But now we'll get into my portfolio and what I'm looking forward to. So Vivint Solar has actually not been hit too hard. Of course, that is because they are a US-based company and do the vast majority of their business here in the United States. This has been a saving grace for me, up $205 all time, up 21 today alone. So I was really concerned that Vivint Solar might have finally peaked. It looks like that's not the case. Again, this next earnings call is going to be interesting. So on the month, we can see up 45%. On the last year, up 117%. And 5 years, we can see it is up quite a bit. But a lot of this is coming within the last 5 or 6 months after this large dip in 2015. And next up, we have SPHD, which is my S&P 500 ETF. I'm going to try to cover as many as I can today. I've been struggling to get a lot of these done lately. So as we can see, down $10 on the day, $38 all time. Definitely concerning, but again, the S&P 500 was hit extremely hard, as well as the fact that there's just a lot of things going on. That being said, I think there's a lot of reasons to be positive, as I've mentioned before, and this does pay a monthly dividend, so that does help to offset some of the costs associated with it. So over the last year, down 8%, but again, if we zoom out here to January, it was up 5%, as well as paying a 4.5% annual dividend. So on the last 5 years, we can see it's been a little stagnant, and this is why I have held off on buying some more shares. VTI has fared a little bit better for me. This is my total stock market ETF, as opposed to the S&P 500. On the month, down 8.8%. On the last year, only up 5%. But again, we can see it was up about 19% there. Over the last 5 years, still at 40%. And of course, I am down $1 on this, but this pays a decent dividend as well. Coca-Cola has actually fared decently well. So if we start to zoom out again, we can see that they have gone down, peaking here right around $60. But again, down 5% on the last month compared to what's happened with all these other industries. Not something to be concerned about at all. As we zoom out to the last 5 years, we can see decent growth here. Of course, I always like to talk about the dividend. They are a dividend king, meaning that they have increased their dividend a minimum of 50 years in a row. Total return of $7 plus the dividend. Very happy with that one. Microsoft, as I previously mentioned, has been hit extremely hard. Still up $42 on all time on this one. Definitely a great pick for me, and I'm looking at buying another share of Microsoft fairly soon. So on the last month, down 6.5%, not a huge deal. Still up 11% in the last 3 months, 47% on the last year, and in 5 years, up 280%. And next we have Agilent. This one struggled certainly quite a bit. R&D, I didn't think would be hit super hard by this, But of course, the technology and manufacturing aspects, as you can see, have been hit extremely hard. It's down 2% on the day, still up $17 on this all time. Again, this does pay a pretty good dividend. I like to pick stocks that have decent paying dividends. So it is down on the year, but not a huge deal. Over the past 5 years, up 89.7%. That's a solid one for me. I'm not looking at buying any more really in the near future. AT&T, definitely a stock that I'm looking at buying more of, even as the ratings decrease. The super high dividend here and the advent of 5G technology in the coming years should be good for AT&T. So as I said, trading for $36.43 right now. My average cost is still $37, so I am down on this all time, but it does pay a very high dividend. As we can see, let's go down to the earnings. Their earnings has been very consistent, and so that's a key for them. That consistency means that they're going to hold their value better than a lot of other companies. And as I showed earlier, I did get a very large discount on this stock because of this coronavirus outbreak. So up only 6% on the last 5 years. They've been up and down. But again, that very high dividend helps to offset some of those costs. Next up is Pfizer, one of my worst stocks. It's been struggling mightily, down $24 on this one all time. Over the last 3 months, we can see down 9%. Over the last year, down 20%. And over the past 5 years, only up 1.5%. Thought about selling it. Certainly not something that I want to buy right now. There's not a whole lot of indicators anymore that would say Pfizer will be a good investment. Verit, I always like to talk about this one, pays a constant dividend of $0.1375 per share. I am down $14 on this one all time. Interestingly enough, real estate has been hit. I'm not sure particularly why that is, but they are down 9.3% in the last month, only up 12.5% in the last year, and in the past 5 years, only up 4.6%. Like I said, this pays a constant dividend, which means those 15 shares that I own are paying a pretty high dividend quarterly. I think I'm going to stay put on that one for now, but definitely stay tuned. That could change in the coming weeks. Sony's been hit extremely hard, clearly based out of Asia. Same thing that we talked about with the supply chain. The companies are struggling. I'm still up $14 on this one all time, 13%. Over the last month, down 12.5%, big hit. Over the past 3 months, down 3.5%. Over the last year, still up 30%, and in the last 5 years, up 126%. I think I'm going to stay put on that one for now, but as I previously mentioned, the new PlayStation 5 coming out this year could be a big one for them. Logitech, trading for right around $40. Small return on this one all time, pays 1 dividend per year. Not the biggest fan of that, but it is what it is. And that'll pay in August. Up 4% on the year. In the last 5 years, up 170%. Definitely one that I would consider buying more of. Next up is Walmart. They've been hit mightily, down $6.50 all time. But if we look in the past month, only down 2.5%. The bigger problem is when we zoom out. The market was performing very well here from December into January, but it has gotten hit pretty hard. I bought this one a little bit late, and that's why I lost money on it. But I think this is a good one for the future. Slow growth, but constant growth for them, up 34% on the 5-year mark. And we're getting towards the end of the list. Charles Schwab, I've talked about this one many times. There's a lot of good things for Charles Schwab right now. Certainly the purchase of TD Ameritrade would be the biggest one there, but there are some downsides. On the last month, it is down 18%. On the last year, down 18%. And over the past 5 years, only up 30%. I'm considering selling that one, but I don't want to sell too many positions. And I think that right now, the best thing to do would be to hold until the market is better. Realty Income. This is actually going to start paying its first dividend here in mid-March. I am down $4.50 on this one all time, but again, monthly dividend is wonderful, and I believe in these REITs. So over the last year, we can see it's up 8%, and over the past 5 years, up 48.5%. Next up is KeyBank. This one is also paying a dividend this month. They've been hit extremely hard, down 16%, but like I said, everything's been hit hard. Average cost $19.26. Over the last month, down 16%. Over the last 3 months, down 14%. Over the last year, down a little bit, but not too much to be worried about, and up 16% over the past 5 years. After KeyBank, we have Four Corners Property Trust. This is one of my smaller positions, actually one of my smallest. I am up 92 cents on this one all time. The big upside here would be a large dividend that pays quarterly. Over the last month, we can see down 5%. Over the past 3 months, up 5%. Over the past 5 years since that IPO, we can see up 162%. I was a little bit late on that one, but I have been pretty happy with that in the short run. Corning has been one of my worst performers, down 16.5%. Again, this has to do with the supply chain from China. There's not much I can do about it, but I'm just going to stay put with this one for now, down 11.7% in the last month, 30% in the last year, and down 0.62% in the past 5 years. Let me know what you think I should do with this one. Not totally sure yet. And Penn Gaming is my last stock. This one has been my single worst performer, down 32% for $12. I actually bought here at the peak for $38. It is what it is, again with this one, but I'm confident in them in the long run. I think coronavirus has definitely made people skeptical, and gambling is not the most steady of markets. That being said, I do like this position, especially with the price decreasing now. I think it could be a good time to buy, so stay tuned on that. Over the past 5 years, we can see 60% growth, no dividend there. The last one we're going to talk about, of course, is Bitcoin, trading for about $8,800 right now. We can see I am down $72 on this all time. I was up on this a couple weeks ago, but it's not the end of the world. Average cost is $98.28 and 70 cents. Portfolio diversity, we can see it makes up about 17% of my portfolio. And as I mentioned before, I have about 7% of one Bitcoin. This is a position that I continue to increase every week, slowly but surely. And of course, in December of 2021, I think this is when it's going to see its final peak, or rather, largest peak, and then a large sell-off. So we can see here it peaked at about $10,500 this month. But again, this is a long-term play. We're really in the next year and a half. So I'm not concerned about this one at all. I'm not going to sell this position anytime soon. It is still up 20% in the last 3 months. And over the last year, we can see huge growth, 132%. And of course, it's Bitcoin. When we start to zoom out over the past 5 years, we can see 3,100% growth, which is definitely amazing. So that's my full portfolio. I have lost money, but I am pretty confident about the portfolio itself and the future of my channel. I'll continue to update you on my portfolio. And of course, I'll be back with another video next week. Thanks.